Hey guys, welcome back. Today we are going to solve one problem from June 2024 question paper, rectification of errors. And the rectification of errors actually the very easy one only, but we have to understand the concept. If you understand the concept and we are thorough with the journals, then it is just easy like anything. Okay, so first, what could be the what is the rectification of entry? What is rectification of entries? If you have done any mistakes or errors in the books of accounts, we have to rectify that with the entries. That's the rectification of entries, right? So what could be the mistakes? The mistake can be omission. If we have partly omitted, only one side omitted, or fully omitted, two side omitted. So partly omitted, TB won't agree. No, TB won't balance. But if it is a full omission, TB will agree. TB, what is TB? TB is just a summary of transactions, and we will check whether the debit and credit are matching. So debit and credit are matching. If the values are actually balanced, it will balance actually. If we have omitted fully, then TB will not agree. If it is partial omission, then TB won't agree. Okay, if it is full omission, TB will agree. Right. So if what does it mean by omission? We are omitting the either debit or credit entry. Okay. What does it mean by error of commission? For example, if sale is 100, but we have posted it as 200. No, commission on the process we have done any mistake, like instead of 100 we posted like 200, right? So that's the error of commission. So we have committed the mistake when we are doing the process, that is commission, right? Done. Then this is also can be for one side and two side. If it is one side, TB will not agree. If it is two side, TB will agree, obviously. If it is TB is what, the TB is just comparing the debit and credit side, right? So if the two entries are equally missing, so two entries are equally missing, the couple entries are missing, then TB will agree. If it is if only one entry, TB won't agree. TB won't agree, right? So that's it. So error of principle. So we have accounting conventions and accounting policies that, so if we are if our entries are wrongly posted, like for example, salary account debit to cash account as posted as purchase account debit to cash. So salary as posted as purchase. So this is the error of principle. So we have to reverse it. So we have to reverse the work, right? So this actually here the TB will balance, because we are not we are not omitting or we are not committing any mistakes in the process, but we are just replacing the or wrongly posting the term only. The term only changes, but the matter is similar. Okay, 100, the values are similar. The postage of the terminology only differs, so it will actually match. Okay, error of principle, I hope you guys have understood. So okay, compensating errors means there is a plant and machinery we have purchased for 10,000, but we have entered it as, you have debited it as 9,000 only. So okay, so this entry would be like this. For example, then we have done a sales for 9,000, but we entered in our books as we have received 10,000. So actually, if you see, credit, debit matching, debit, credit matching. So this is the compensating entry. 9,000 is matching, 10,000 is matching. So it will compensate the errors and the TB will agree for this. So that's it. So these are all the major things we have to know when it comes to rectification of errors. Now we can directly get into the problem. So this is, I feel like I'm just working out this problem only in videos. So if I just explain the if I just brush up the surface level concepts, you will get better understanding when we are going to the problem. So that's the sole purpose I have explained you the concept. Okay, now we can directly jump into the problems, right? Okay, trial balance of Rajesh. Okay, trial balance of Rajesh on 31st March 2023 didn't agree. Okay, so TB not agreed. Then they have a balance of suspense account rupees 26,700, which is on debit. Okay, on 25th April Okay, actually they have put the adjustment entry, which is suspense account. They have move ahead to the next accounting period. On 25 April, they are actually rectifying the errors. Okay, so how we have to rectify the errors? What are all the errors now? So when it comes to rectification of errors, we have to put 3 columns, which is correct entry, wrong entry, which is actually given, rectify, how you are rectify. Okay, right, that rectification entry. Now the first thing is discount, cash discount allowed to a trade debtor. So we have sold something and we have gave the discount for debtors. So discount is the expense, discount account debit to debtors account. How much? 4,500. 4,500. This is the current entry. What they have done? Not debited to the discount account. They have not debited the discount account itself. So they have actually, so they said the error only they will say, other things will be right. Okay, that's the assumption. The core assumption is whatever the error happened in the entry, they will clearly mention that is not debited like this. If whatever the, so other entry which is debtors, right, debtors is actually right. So that's how we have to assume and work. Okay, so the debtors is 4,500, but they have not debited to the discount account itself. What we have to do now? We have to debit it. So discount account. But where we are actually in? We are in the next accounting period. When it comes to next accounting period, we should not enter the expenses and we should not enter the expense and incomes as it is, because that will affect that year's P&L. So to show the difference, we have to put it under P&L adjustment account. So whatever the expense and incomes, we have to show it under show it as P&L adjustment, right? Okay, now P&L adjustment, fine. Now, so discount now it has been recognized as P&L adjustment account, debit. Actually we have debtors here. Debtors has been correctly credited, so we don't need to touch the debtors account. So what we have to do here? We have to put the suspense, right? How much? 4,500. 4,500. That's it. Second entry. Credit sale they have done. What's the entry for credit sales? Debtors account debit to sale. How much? 6,550 is the correct entry, right? What they actually done? Posted to the credit of the customer's account as 5,650. Okay, what they have done is, the sale was right, 6,550, but in the debtors account they wrongly credited as, sorry, they have credited, actually it has to be debited, they have credited it, right? So what we have to do here? To debtors account, which is how much? 5,650. They have to actually debit it, but they have credited even after they have committed the mistake on wrong value. Okay, now we have to reverse this value and we have to add back this value. So what would be the amount? 6,550 plus 5,650. Okay, first we have to reverse this balance and they have to add this balance. So 6,550 plus 5,650, which is 12,200 is what we have to add it in the debtors account. Okay, debtors account debit. So sale they have recorded, so we have to put to suspense account, right? Now, correct, we haven't added this balance, we have added it, and we have to reverse this balance, we have reversed and we have added this balance. Okay, so the entry is debtors account debit to suspense account. Debit sale is properly credited, so we have to use suspense here, right? Then third entry, which is machine purchased, machine account debit to cash account, right? How much? 50,000. What they have wrongly done? They have posted to purchase account. Okay, purchase account debit to Cash. Actually, they have done everything right, but the thing is, they have posted it to the purchase account. So 50,000, 50,000. So cash was properly credited. Right. Now, what we have to do? This is the both things are the credit items are right. We haven't debited the machinery account, which is then we have to debit the machinery account, right? So machinery account debit, which is 50,000. To purchase account, we have to reverse it, right? Purchase account, which is 50,000. Okay. Then what else? Rate of depreciation has to be provided. So depreciation account is depreciation account to machinery account. Machinery value will reduce how much? 50,000 into 15 percentage, right? Into 15 percentage, and purchased on October. The year starts on 1st April. Okay. Then this is how much? 15 percentage into 6 by 12. 3,000 into 15 percentage, so by 12, which is 3,750 is the depreciation. So we haven't made any entry for this. So add as it is. Depreciation is the P&L adjustment entry because this is expenses, right? So P&L adjustment account debit to machinery account. So machinery is the asset. So it has to become as it is. But here the purchase we have directly entered here. But we should not enter any expense as per expense itself, right? So we have to recognize it as P&L adjustment. P&L adjustment means last year entries. Okay. So we have corrected it 3,750 for the current entry, which is depreciation, right? So machinery assets and liabilities should be entered as it is. Income and expenses should be recognized as P&L adjustment. Okay. What's the fourth entry? Sales book was overcast by 10,000. Sales book means credit book. If it is a cash sales, that would comes under cash book. So sales book means this is the credit book. Okay. So debtors account, credit sales we done to sales. How much? 10,000. We assume, okay, 10,000. So what actually happened? It has been overcasted by 10,000. Okay, debtors has been correctly put, which is 10,000 to sales. Sales has been increased by how much? Extra 10,000, which is 20,000. So we have to reverse the sales. So sales is the expense entry. So sales is the income entry. So P&L adjustment account debit to suspense. Okay, which is 10,000. Guys, this entry is right. So we have mistake with sales entry only. Sales entry we have reversed. So opposite entry should be suspense only. Okay, that's it, suspense. The last entry is we have to adjust all these P&L adjustments right into the capital account. So how much is the P&L? The entry is P&L adjustment account debit to capital account. If it is profit, okay. If it is loss, we have to reverse it. Capital should come under comes on top debit side, and the P&L should come on credit side. Okay. So how much? First thing, 4,500. 4,500 is the negative balance. Okay, 4,500 minus plus 50,000 plus 10,000. Sorry, minus 10,000 minus 3,700. Okay, so 4,500 minus plus 31,800 is the balance. We have to transfer it to capital accounts, right? So we have done. Then we can directly open the suspense account. What's the suspense balance? Debit balance given in the question, right? How much? 26,700. Okay, we have done, posted. Then what are all the suspense entries we have? By adjustment 4,500, 12,200. Then no suspense, suspense, yes, 10,000. So 4,500, 12,200, 10,000. So if we total it, actually balance. Okay, 4,500 plus 12,200, 10,000, which is 26,700. So by P&L adjustment. Okay, that's it. The problem came to an end. Okay, let me give a quick recap of what we have done. So what they have said, discount has not debited, so we have debited it. Through in the name of P&L adjustment. So only one entry, opposite entry, should be suspense, because it is after trial balance, after accounting period itself, the next accounting period. So obviously we have to use the suspense account, right? If it is before trial balance, we should not use anything here. This should be left empty. So we have to post only this item only, not this item. Discount allowed has to be posted if it is in the same year. So right, so we have posted the discount allowed as the P&L adjustment account here. Okay, then the next entry, we have sold the assets for 6,550, but we have posted the sale entry correctly, but we have credited the debtors account by 560. So we have to reverse that amount. Also we have to add 6,550. So we have done that through suspense account. Okay, right. Then machinery was not actually posted, so it has been recognized as purchase account in the wrong entry. So we have corrected it by reversing the entry. P&L adjustment is actually referring the purchase we made. We wrongly posted. So then for the machinery, we have to give the depreciation, right? So depreciation has been given. Depreciation has been termed as P&L adjustment, right? Then fourth item is sales. Debtors account debit to sales account. So this was actually overcast by 10,000. So we have reversed the sales. We have reversed the sales by 10,000. Sales is the income item, so we have termed it as P&L adjustment. So that is done. So all the P&L adjustments, negative and positive balance, gives the value of 31,800 that we have transferred to the capital, right? Then suspense account has a debit balance of 26,100. So after we have identified everything, we came to know that these are all the mistakes which has been actually sitting inside the suspense account. So we have actually balanced the suspense account. We came to know that what overall the balance has been created this suspense. So that's it. End of story.